to Elementary. I hope you're having a fabulous Monday wherever you are. And I don't know what you did today. Were you out Cyber Monday shopping? Now, it's quite possible because perhaps a lot of people were, well, not out, but on your computer. I'm sure there were a lot of people. Deals to be had. You know what's troubling is actually people buy now, pay later. Oh my goodness, I'm actually nervous for you. Hello, how are
Hi,
you, Manny?
Jacqueline. I'm well. How are you doing?
I'm good, thank you. So,
Good.
yeah, we'll get started. Why
Yeah,
don't you introduce
absolutely.
yourself and tell people who you are?
Who I am. Yeah. So thanks very much for having me again.
Yeah.
I've been a recurring guest on the show for a while, and I love it every time. My name is Mani Najafi. I'm a level two mortgage agent here in Ontario, obviously working across Canada, but my main focus is Ontario. Today, I wanted to talk to you. The reason why I wanted to come on was to talk to you about a lot of these changes that are happening with the mortgage industry. And we can talk afterwards, after these rule changes, about what's happening in the market and what we can expect for the end of 24 going into the Q1 of 25.
That's right. That's right. And for all of you watching, of course, we appreciate your time. So why don't we get started? Why don't we ask people? Uh-oh, he's frozen. He's gonna be back in a jiffy. If you can hear me, sign back in. But let's take a detour for a second. So shameless plug, I am doing a toy drive, and it's actually for um, these kids that are in a shelter. So if any of you are interested in wanting to donate a toy, I would be delighted if you would donate a toy, and we can pick it up. We can arrange to pick it up, the whole 9 yards. Perfect. You're back.
I'm back. Yeah. Sorry, I'm not sure what happened. I got kicked out.
Uh, it happens,
But, so let me start again. My name is Manina Jaffe. I'm a level two agent, mortgage agent for Ontario. Uh, um, so I'm here to talk about some of these mortgage changes, and again, what's happening with the market at the end of 24 and possibly going into 25. I'm sure a lot of people that are just waiting on the sidelines, waiting to buy, they want to know what's going to happen. So you were telling me about your toy drive. Sorry, I think I cut
Oh,
you
no,
off.
no, no. I just took a detour because I was waiting for you
Yeah,
to come back, and I was
yeah,
just telling people that I'm doing this toy drive, and that if anyone was interested to donate a toy, or even if you wanted to make a monetary donation, you can. You get a receipt if you do make a monetary
yeah,
donation, but it's for a good cause, right? I normally don't
absolutely.
ask, and I normally don't, take on because everybody's asking for something I mean, for me, everyone's asking for something all the time of the year, but it's hard because I know people are struggling, but at the same time, when I look at it, I also look at, kids who are in a shelter really didn't ask to be there, right? It's an unfortunate circumstances. They just go where their parents are. And so that's why I said yes to participating. And so I was just kind of giving a shameless plug
Yeah.
out there.
No,
But yeah, let's get
no,
started.
no shame about it. Right now, again, I don't want. There's a lot of people struggling, especially around the holidays. It's much harder, particularly about the kids. Right? It's hard. It's like the parents can understand. It's harder for kids to understand. So I think it's a great opportunity to give a little bit, back. I know it's been a hard year for a lot of people, but if you can give a little bit, always it goes a long way for so many other people.
That's right.
Yeah, yeah.
So tell us about the new rules. What
Okay,
can
so
people
there's been a lot of
expect?
changes. Yeah. So look, there was changes that happened midsummer.
Mhm.
There's ones that kicked in November. There's ones that are kicking in December 15th, and there's other ones that are happening in January.
So,
I think the most
do you
important
want to
ones.
start with the ones in December first,
Yeah,
and then we can go
yeah.
backwards after?
Um, yeah, so they're actually all
Okay,
tied in together.
so
So
then
in
start
August,
anywhere you
yeah,
want.
yeah. So look, there are Obviously, the government's realizing that, especially a lot of first-time home buyers, they need a lot of help, a little bit of a helping hand. So there's some changes what the government proposed. There's some changes that OSFI themselves are considering. It's the governing body as well. So a lot of these are pertaining to either first-time home buyers or insured mortgages, and I can go into a little bit of a detail in a lot of it. So what is an insured mortgage? Well, if you are purchasing a property as an owner occupied, so either your own home or a second home, you are allowed to put down less than 20%, assuming that fits in within the price range what the government has mandated, as well as how much down payment you have available. So normally when you buy a property, you put down 20%, which becomes a conventional mortgage. If you don't have that initial 20%, up to a certain amount, and assuming your income qualifies, you can put down less income and get a high ratio mortgage where it's reinsured with a mortgage default insurance from a company like CMHC, Canada Guarantee, or SAGN. Okay, so for all of our purposes, I'll be referring to CMHC as the main governing body that would oversee some of these regulations. On August 1st, and it kicked in again in November, where they said that initially it's 25 years amortization. Now they're extending that amortization period for an insured mortgage up to 30 years, right? So you get an extra 5 years that you can amortize on top of, which would help you on a month to month dollar value of how much you're paying for your mortgage, right? So that's the first thing. The second thing is they extended that 30 years amortization not only to first time home buyers, but to anyone buying a owner occupied home for a new construction. So if you're not a first-time buyer, but you're buying your own home and it's a new construction, whether it is a townhome or a condo or anything else, you can actually amortize that also up to 30 years. So that was the first thing they did if you're doing a high ratio mortgage. Okay. The second part of that that's kicking in December 15th, which is 2 weeks from now, is that they've increased the cap of 999,999, just $1 shy of a million. They've increased the cap to actually $1 shy of 1.5 million. So what that means is, under the previous regulation, you'd have to put down 5% on the first 500, 10% for the remaining 500, up to $1 million. Now, the new regulations as of December 15th is 5% of the first 500,000 and the remaining 10% from 500 to 1.5 million, essentially, right? So that means that you could potentially purchase with less than 20% a home that's up to about $1 shy of 1.5 million. Now you still have to qualify for the mortgage, whatever that amount may be. It's all based on your income to loan value and a bunch of other things. But that's increased the cap. So if a lot of homes right now are just above that 1 million, if they want to buy, let's say, a semi or a fully detached. So that allows the first time buyers to get into a more appropriate house for their budget, up to 1.5 million. Okay, so again, you have to qualify for the mortgage, like with all of them, but this just increases the cap. So if you don't have 20%, but your income qualifies you for, let's say, a home that's 1.2 million, but you don't have that extra 200 and $40,000, you can actually put down less, qualify for the rest of it, and be able to get a CMHC or Canada Guarantee to give you that mortgage default insurance. Okay. Do you have any questions about what I just said?
No,
It's a
no. What I'm going to
yeah.
say to people actually at this point is that if you have any questions and you'd like to ask them, whether it's in regard to this or just in general, feel free to use the question icon or the comments. I'm monitoring the comments, and or you can even drop them in the question icon, and
Yeah.
we'll get to them at some point today. So we'll just continue, and if there are any questions, I'll make sure
Yeah,
I get to
I'm
them.
happy to go back. Look, so the part of the regulation part still sort of applies. They just kind of increase the caps, and they've increased the cap in both the years of how much you can amortize and the amounts. This is to help include some other people that were just being cut out. Now, again, I'm not here to say whether it's a good thing or is it doing enough or not. obviously with these regulations, now more people can get into the market, right? You still have to qualify. It might be a bigger mortgage. But the way I look at a high ratio mortgage is how long is it going to take me to come up with that 20% versus can I get into the ownership faster? And being able to save all those years that it takes me to build my 20% versus building equity, right? So the way I justify for a lot of my clients is, okay, what would happen if you wait and how long would it take you to save that extra 10 or 15% versus what happens if you get into the house now and build equity and then, down the line when your term is done, go back into like a regular mortgage. Okay. The other thing that changed back in November, if you were doing a high ratio mortgage previously and you wanted to switch from one bank to another bank, before, if you already had a high ratio mortgage, you could do it without having to qualify for a stress test. Okay, and I'll get into the explanation of what that means. Whereas as of November, you could do a transfer switch without a stress test, even if you didn't do a high ratio mortgage. Okay. So what that means is a switch is when you take your mortgage from one bank to another bank without changing anything. You keep the same amortization at the end of the term. Let's say your term is done with TD, for example. You have 20 years left in your amortization and you have $1 million left on your mortgage. You can take that, go to a different bank. It's called a switch. You're not adding a single dollar. You're not changing anything to the amortization. You're going to keep the same and everything's ready to go. Previously, only if you had an insured mortgage, you could switch that without having to requalify with that 2% extra, which is the stress test. The new regulations allow you to do a switch for a conventional mortgage to a different bank, assuming that you don't change any of the amortization or changing any of the dollar value. The minute you start to change all of that, it's no longer a switch and it's a refinance, and existing mortgage and stress test rules apply. Okay? So that's a little bit complicated. So I'm going to repeat that again. If you're doing a switch, so you're not changing dollar value of the remaining balance on your mortgage, you're not changing the amortization or anything else, you're just simply switching banks to bank, whether you did an insured mortgage or a conventional mortgage when you purchased the property or whatever it was at the beginning of the term, you can switch that to a bank without having to requalify for a mortgage. Where that comes in handy is if the clients want to switch banks or they want to switch lenders, and they don't want to go through having to qualify for an extra 2% on top of the rate. So if income is a bit of an issue or some things have changed in your personal finances, you could simply switch banks without having to requalify. Now, if you want to do a refinance and take some money out of your property, add in a second mortgage, add in a line of credit, a HELOC, or all that, that would be considered a refinance. And the I guess the stress test would apply at that moment. So the benefit to that would be if you wanted to switch a bank, switch your mortgage, keep it exactly how it is, don't have to requalify. And if you need more money, then some of the banks will allow you to, or some other lenders will allow you to put in a second behind your first mortgage without having to touch the first one and just qualify with the stress test for the smaller amount on the second. Again, it's part of a bigger strategy, but it can come in handy. It's something that they opened up so that not only includes insured, but conventional mortgages as well for a switch.
Okay, so I have to
Yeah.
say I goofed again and I
Yeah.
touched something on my screen
Yeah.
and I'm not appearing to be distracted, but I can't seem to see the comments anymore. I've
Oh boy.
made them disappear. Okay, audience, I've made your comments disappear. I'm a magician today. But anyways, I'm really sorry about that. But
Look,
if you catch some
yeah.
comments,
Of
right?
course, I'm
Um,
sure it's all positive comments, but if you guys have questions, you can message me directly. Again, so these sort of regulations, obviously, is a little bit confusing to some of the people that are not familiar with the mortgage or real estate industry. If you're not sure, it's always good to talk to the people that are the experts, right? So if I have any questions about home property values or different things, I do have people like yourself, Jacqueline, that I go to regarding some of those questions. So I would just ask everybody just to message me or call me directly with some of your questions and comments, because sometimes you don't want to air out your laundry in front of everybody else, right? So every specific question, and I can make it specifically for you because everyone's case is a little bit different. These regulations are very general to a lot of people? Does it apply to your specific case? More than happy to take that question or those comments offline. We can have a quick chat. But these are just some of the changes that are coming into play. They're really meant for people that are just on the cusp of being able to afford a certain home, and it's going to help them to get that extra little bit. Is it gonna make or break the real estate industry? I think they have a long way to go with more regulations and changes coming. I think 2025 being an election year, we're going to see a lot more regulation changes. And I think they're going to get rid of some of the other red tape that might be around home purchasing. That's just my guess. I'm hoping for that. I want more people to be able to get into home ownership quicker.
No, um hopefully that will be, I know I'm kind of doing something here. I don't know what I'm touching, but it's going
Uh,
crazy. I have sparkles on
no,
me now.
it's got a nice Christmas sparkly feel to it. So it's
Whatever.
not
I'm
nice.
just sorry. I apologize. For some reason this thing has gone nuts and it's driving me insane. But um these rules are a lot of rules that have changed and a lot of regulations that have shifted. And
Yeah.
I would say to people, if you're unsure, you're not going to be able to, figure them all out in a few minutes of us just
Yeah.
chatting. So, if you have any questions, you need to reach
Yeah.
out. Absolutely, because and how these rules affect you will be different based on
Yeah.
your
Yeah.
circumstances, right?
So
Um,
everyone's circumstances are specific. Now, I will say again, these regulations could change. The reason being is because look, they already announced some of the changes in August, and by the time September rolled around, they had changed those regulations again before the announcement, right? So there are specific changes. Some of these may apply to you, may not apply to you. I think it's more particularly for first-time buyers, right? It's a matter of how much can you qualify for and how much down payment you have. If you know those two figures, then I can help you with the rest and getting you qualified. I think the most important thing is get a pre-approval for your purchase, whatever it is, whether you're doing a high ratio, putting down 5%, 10%, or 20%, or whatever it may be. Always get your pre-approval. That will help your realtor's job a lot easier because then they can narrow down the search for properties that are more to your liking versus ones you can't afford, but you end up liking and but you can't get it anyways, right? So you might as well help yourself with and your realtor cutting down the time of searching by getting a pre-approval. So you know your parameters, you know what's offside and what's not, right? You know where you want to be and what you can afford. The second thing is, okay, what are my future plans? Do I plan on keeping this house, selling this house? And how do some of these rules down the line, if they don't change, how can they help me with my finances, right? So I look at your finances from a holistic point of view. I look at an overall picture. What that means is like we're not just focusing on your mortgage payments alone, right? Your life involves more than just your mortgage payments, your car payments, your this and that. So we have to see, to help you buy a property, that's not going to kill the rest of your finances for the rest of the things that you require, right? And I've seen it way too often lately where people don't get a pre-approval and they over leverage themselves by signing for a home where realistically it's going to kill their finances or vice versa. They don't know what kind of house they can afford. They buy something small and they realize, oh, they need a bigger house and they could have afforded a bigger house, something that their family can grow into. So it goes both ways. So I think it's always good to know exactly where the outside lines are, which you don't want to go out of, right? I'm sure you can speak to that where sometimes you're not sure exactly what to show a client because you don't know what they can afford.
Yeah, well, first of all, I mean, when it comes down to home showing, um, there are a couple of things at play, right? When you
Yeah.
are talking about wanting to go out and see homes, and sometimes I'll have people call me willy-nilly and they just want to go see a home. And it's like, look, I mean, I know you kind of, some people will depend on the open house, or some people would depend on um, a realtor to take them. But really, you
Yeah.
should be getting all your finances in order before. I mean, there's no point looking at a home and then being disappointed, right?
Yeah.
Plus, I mean, look, your time is time. My time is time too. I want to show you as many homes, but I also want to make sure you're qualified. And the other part too is when I take you into to a home, I need to know who I'm taking into a home, right? After all, it is my insurance that is on the line here, right? If I'm taking you into a home and you have no intentions of really buying a home, and I'm not sure why you want to go and see it then. But there are a lot of people who don't want to really give you the details of who they are. Like sometimes you'll get cold people who come in, right? And they'll contact you and they'll say, "Hey, I want to go see this house." And I'm like, "Okay, great, but there are a few things that we want to put in order before we show the houses, right?" And I'm saying it today because I think a lot of people or newer agents, they don't really may not do the legwork before. I know they
Yeah.
get excited, they want to show the home, but really it's your insurance on the line. And you also want to make sure people have good intentions of seeing the home. I actually had one lady who wanted to see, I know we're going off topic a little bit, but
Yeah.
one lady who wanted to see, and we're not talking um like, you know, $1 million homes. We're talking 3.5 million. And, I showed her the first one and I kind of had to say to her, look, we need to do some legwork. Like, we're not going to be able to just show you homes willy-nilly. And I'm
Yeah.
like, why am I showing you these homes if you can't afford it, right? Like, let's be honest, I'm not here to just take you out for Sunday drives, but
Yeah.
we can be friends, just,
Yeah.
not seeing other people's homes, that's
So look,
all, right? So it's important to understand that
yeah,
piece,
absolutely.
right?
Look, even they're saying, $3.5 million home or $3.8 million home. Um, not there are some lender rules that does play a role when you have a house that size. So, for example, not a lot of people know this, but in certain areas, like postal code areas or dollar wise of the home, not every lender will go up to like 80% or 70%, right? So they
Hmm.
have this thing called a reducing scale, where if the house gets more expensive, they'll offer a little bit less and less. So you might have to put down more than some of your conventional 20% down, right? So it's the little things that we uncover during our discovery call. And oftentimes I find, like, when you talk about someone's finances, they're a little bit more open into saying what's going on, right? And I've seen it where realtors would sell a home. They're happy that they got the sale, but the clients cannot close on it. So they don't end up getting the sale in the end. So you might as well do the 90% of the work that you got to do during that closing process with your mortgage. You might as well do it up front. And all they got to do is just sit ready. As soon as you pick a home, they just plop the address onto the application, and a lot of your hard work is done. So you can actually focus on the closing process and the moving and all the other things that comes with when you're switching homes, right? So I have a couple of questions actually that came up on my side. Number one, what's the fee for my services? Well, my consultation, when I'm looking at your application, is absolutely free. I never charge unless we really have to. So most of the time with banks and all that, banks do pay a finder's fee to people like myself. So I never typically have to charge anybody for an A side. I'm just looking to build my relationship with my clients and look for long-term relationships where I can see potentially, more business coming from them. I'm more interested in building that relationship and helping you and giving you the right advice versus what I can get paid on, right? So that's always there. And the other question is, if I could change one rule or regulation, what would it be? I think it would be the minimum down payment. Sometimes I think it's really hard for people that can afford a mortgage to actually be able to save up to 20%. And right now, we know
Mhm.
people are probably spending a little bit more than what they should be saving. So coming up with that 20% or having the bank of mom and dad to give you that giant gift that you need. The average gift right now is actually, the last stat that I read was about $120,000, right? Not everybody has $120,000 to gift their children. So if I could change one rule, would be to reduce that 20% to a more something more manageable, like 15 or 10% to make it conventional. But some of these new regulation changes for a high ratio mortgage does help quite a bit.
Mhm.
Uh, yeah. And hold on, one other question. Fixed or variable is not the ultimate. That's the ultimate question. So look, um, how I answer this question really depends on a few different things. So number one, what's your ultimate goal with that property? Whether it's your forever home or it's your home that you're going to be living in versus an investment property that you look on selling in a year or two, right? So all those little things matter. I think number one is, can you qualify with a fixed rate or a variable rate? Right now, given where variable rates are, where prime is, and what discounts we're seeing in the market, it makes more sense in terms of qualifying to go with a fixed rate. But that's as of today, right? If Bank of Canada next week reduces the rate by a half point or a 0.25, the conversation might change a little bit. But as it stands today, if you're having trouble qualifying, going with a fixed rate where you're getting potentially a percent better on the qualifying part, that just allows you to qualify for a bigger mortgage. But if you can qualify for both, and it is your home that you want to live in, and you want your payments to start going down, I would look at a an adjustable variable rate. Right, there are some banks where the variable rate does not move if Bank of Canada or Prime moves as much. Some other banks, they do have the advantage of having an adjustable rate where if the rates go down, if your prime goes down, and whatever your discount is, your rate and your monthly payments will go down with that, right? So if you have a limited budget, that might be something to look at. But it's case by case. It's hard for me to give you just give you one statement and say that's always fixed and that's always variable. It does matter. I know it's not an answer that people want to hear because it's case by case only. And I have clients where one of their properties is variable, one of them is fixed, or vice versa. They have a mix. It all depends on what the ultimate goal would be, right? So, but but gun to my head, if I had to take a guess, your first home, owner occupied, you can manage the payments, you're looking for a little bit of relief as Bank of Canada reduces rates, I would probably go with an adjustable variable rate. That's just me. I'm a little bit more risk tolerant, so I can kind of ride it up and down.
Yeah. Well, I think it's important to work with someone that will can give you those numbers and help you understand the difference if you're looking. And your goals will matter then, right? Like what are you hoping to achieve? Um, Now, a lot of times I'll work with younger people, and they'll buy a home and they'll say, oh, we're gonna move in 2 years.
Yeah.
But they're not. But at the same time, they're taking a 5-year mortgage, right? And I
Yeah.
say to them, if you're planning to move in 2 years, don't take a 5-year
Yeah.
mortgage because it's
Yeah.
going to be a hefty penalty.
Right. Yeah.
Right? And make sure you understand what it is, because some mortgages may not have like proper terms and conditions, and
It's
they may be discounted, but you know
there's
yeah.
there with mortgages, there's a lot of fine print, as I'm sure you know, with any contract, right? And it all depends. So I've had clients where they see a smaller number on the rate, and like you said, it's typically the 5-year fixed rate does have a fairly good rate if you look at, compared to all the other rates available on all the other products, they see that. But if you're selling a home in 2 or 3 years and you have to pay the penalty, if you factor that in, that rate actually starts going higher and higher. So it's really important that you don't just focus on a smaller number. You have to really look at what your ultimate goal would be and what the penalties might be if you wanted to change. Can you even make a change? There are some lenders, particular lenders, we see less and less of it, but there are some lenders where they have a bona fide sales clause where you cannot change your
Hmm.
mortgage unless you're actually
Hmm.
selling the property, right? So little things like that does matter. So it's not obviously numbers dictate quite a bit. Numbers, I'm a numbers guy, right? The numbers do dictate most of what happens. But when you have a very strong application, you have, a couple that makes good money, their budget's, fairly flexible. You can work with it. They got a good down payment. Then, we can give options and say, hey, if you go with a fixed rate, these are your payments. This is what happens if you break it. Are you keeping it? What? And go through all the scenarios versus what versus variable. Some people, their application is not as generous, so they don't have as much flexibility. But I always obviously look at the whole side. And that's why it's important, again, to look at not just that one property, that one subject, and that one fixed rate or variable. Look at it overall, right? That's why I said I got some clients that they have multiple properties, and for each one of them with a different strategy, some are fixed, some are variable. And you have to look at overall scheme of things. That's why I said I take a look at holistically at your entire life, right? So what are you guys planning on doing? If you're buying in this house, Do you want to be stuck there forever, or do you have some aspirations of changing in a few years? And some people will say, you know what? I don't think we're going to make a change in 5 years. I say, okay, that's your own home. Let's do this. But some people are like, no, it's a pre-construction. I bought it to flip it. But now with the regulation changes, I have to keep it for 1 year. I see
Mhm.
that the most often right now, to be honest with you. People that bought pre-construction properties thinking they could either sell it on assignment or flip it, and then these new regulations kicked in halfway through their purchase that, hey, you have to pay capital gains tax if you don't keep it for 1 year, right? I'm not an accountant. They have
Flipping
their
tax.
accountant. Right, it's a bigger tax. Again,
Hmm.
I don't get into the tax conversation. That's with you and your accountant. But their strategies changed halfway through, right? Because now they have to keep the property and their own property, and they're coming off a renewal and all that, right? So my job is to help you get qualified right now. And I I ask you, like, what's your goal, right? If you say, you know what, I bought this to keep it for like 3 4 years, I say, okay, that's one strategy. Here's your option A and B. But if you say no, I want to flip this in 1 year, I say, okay, here's your option A and B, but we would really want to go with A because of this, this, and this. If you go with option B, if you pay a penalty, it doesn't make sense. It's not feasible, right? So we always have to look at the numbers and what makes sense for you at that time, and then work on the strategy if new regulations changes or if your life circumstances changes, you get a better job, you get a raise, your wife loses a job, or little things can happen
Hmm.
here and there. We'll have to make adjustments, but I don't just willy-nilly and say, hey, you're qualified, go with a fixed rate and do this, right? We look at everything and just make sure I don't take you out of a hole and put you in a ditch, right?
Yeah.
I'm always looking to
Hmm.
help you with the best strategy. And that's why when people ask their mortgage agents, there's other follow-up questions, right? It's not just what's your rate? I'm like, okay, what's it for, right? If somebody just blurts out a rate at you, that's just a sales tactic they've been taught, right? My first question is when they ask me what the rate is, I say, what's it for, right? So for purchase, refinance, property, investment, this, that. So there's other questions to narrow down my advice to you, essentially.
Yeah. These days, I find that people are overextended and overextended for their own good. Like, I think everybody has this living up to the Joneses. There are some people who are hard on times for sure.
Yeah.
I'll give you a good example. I'll say to a person will go in and they'll walk into a car dealership and they'll say, "Oh yeah, I wanted this car so bad. It was only $400 a week." A week.
Yeah.
Do the math. $400 a week, but they cannot afford a house. But they can
Yeah.
afford $400 a week for a car
400.
that is going
I
to
mean, that
depreciate as you
must
drive
be
it
a
off
really
the
nice
market.
car.
Yeah.
That's
So,
all.
you
I'll
know,
tell you one thing. I'll tell you one little caveat. For every $400 a month payment on anything, car, whatever it is, for every $400 a month, your qualification for your mortgage goes down by about $100,000.
mhm,
So give or take, right? So your car payment is 400 a week. That's 1,200 months. So you've just now reduced your potential mortgage qualification by an extra 350K, right? So you
yeah,
could have qualified for a mortgage of 1 million. Now you're qualifying at like 750 or 700, right?
mhm,
It's the little things that matter. And if you do get a pre-approval, don't make any financial changes. Don't buy a car. Don't rack out.
yeah,
Don't max out your credit cards. Just keep your finances exactly how it is for the duration that you have your pre-approval. Because don't forget, when you have a pre-approval, it doesn't mean that it's all said and done. The most important thing is that once your pre-approval turns into a full approval that's required within those 120 days, that's when the banks actually start to requalify you. So if there's any changes in your finances, let your mortgage agents know. Okay. And don't buy the house, please. Don't go buy a new car. Don't go get a new credit card or line of credit and all that, because during that process, they may check your credit again. They may rerun numbers again. So you want to make sure whatever your pre-qualification was, there's not that many changes that are happening by the time your closing comes up. That's very important
mhm.
because a lot of times you go from being pre-qualified and pre-approved into now you got to find a new solution.
So, announcement. Next
Yeah.
announcement.
So next announcement is actually happening in on the 15th. So a lot more details have to come out with that. So there's two changes that are coming in. The first one is more internal on the bank side. There's something called LTI, which is loan to income.
I thought it was on the
So basically,
11th.
uh,
Wasn't it on the 11th?
yeah, it's happening on January.
I mean,
Yeah,
the mortgage rate
Oh,
announcement. Yeah,
the
yeah, yeah.
rate
Sorry.
announcement. I thought you meant more
Sorry, no,
regulation
no,
announcement.
no.
Yes, yes. Okay, so December 25. Now, previous to the last CPI numbers that came out, inflation numbers that came out, previously it was around 1.6. We went up to about 1.9 and now about 2%. Um, there are some inflationary news that have come out.
Mhm.
Okay, so we all know what happened in the US elections. And now that Trump is announcing, for the time being, a 25% tariff on any imports from Canada and Mexico. And there's some news in the market that's a little bit inflationary. And of course, with the CPI numbers that are coming out. The next important announcement is the Canadian unemployment numbers, which are coming out this week. If those numbers are as bad as what they were last time, we could definitely see another drop. Now, right now, the market is pricing in a 0.25 drop. It was previously a little bit higher, but I think the Bank of Canada will still do a 0.5 drop, a 0.5%, right? There is good enough data to support maybe a half drop. If not, then we're definitely going to see a 0.25 drop. So we're going to see another drop, whether it's a regular drop or a jumbo drop, as they call it, Bank of Canada, on December the 15th. Previous to all this news coming out or the US elections, they were saying a half drop in December and for sure a half drop in January. Right now, the January is still a little bit up in the air, but we will see a reduction, in my opinion, on the 11th, for which is next, not this Wednesday, the
Mhm.
Wednesday following at 9:45. There'll be an announcement. So if anybody has an adjustable variable rate mortgage, if the Bank of Canada does drop by 0.5, 0.25 or zero point 0.5, whoever your bank is, you can expect their prime to drop by that same amount, and whatever your rate would be, whether it's a discount or premium, you can say on top of that. These Bank of Canada rate announcements, of course, do not affect the fixed rate market, but what is driving the fixed rate market are the Canadian bond yields. Because of all this announcement with the markets, those bond yields are also fluctuating a little bit up and down. So we haven't seen as aggressive of a drop on fixed rates. Some banks have actually slightly increased it. So most banks
Mhm.
with their fixed rates were sitting. The range is a little bit weird. It's about 4.4 up to about 4.8. So mid fours is what we're looking at right now for fixed rates. And with variable rates, what's important with a variable rate is whatever prime is, you want to make sure you get a good discount or
Mhm.
a low premium if there has a premium. But you always want to make sure your discount, that discount is typically guaranteed for the life for the term, for the life of the term. So if banks are dropping their prime based on what Bank of Canada rate announcements are, your rates, if you have an adjustable rate, it will go down. Not, or you can ask your bank to make some of those changes for you if you have a regular variable rate. So, for example, those people with like TDs or RBCs, you can call your mortgage servicing to see if they can help reduce some of your monthly payments if prime has come down quite a bit.
Mm. Okay. So,
Okay.
before we wrap up,
Yeah.
what 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 are some important things to just cover off?
Okay. So, come off. Number one, don't go if you're planning on buying a home in Q1 or first quarter of next year. Don't go crazy on your credit cards. Okay, so what does affect your credit card or your beacon, your credit score, is not only how much monthly payments you're making. If you're meeting your monthly minimums, that's great, right? That helps to not lower your credit score, but also credit utilization. Not a lot of people realize that if you're keeping a lot of your credit cards or credit facilities north of 80% of the limit or completely maxed out, but you are still making your minimum payment, so you don't have a missed payment, overutilization of your credit payments over time does lower your
Mhm.
credit score as well. So if during the holidays, I know it's difficult sometimes, but if you are planning on getting a mortgage or pre-qualified, try not to maximize your entire credit facilities. Number two, save. But the most important thing is if you want to know how much to save for the home that you want, talk to a mortgage agent, right? You might need less than what you need to get into that home. And the third thing is that um, always make sure you're not working with too many people. Okay. What that means is, I know there's a lot of people that are either rate shopping or wanting to get the best deals. So they put in an application with a lot of different mortgage agents or banks. And over time, Some banks can see that. Sometimes they'll get more than one application for the same person, and that causes either friction with both of the people or the clients. And or the banks will say, well, this information is different than that. So I always try to make sure that you're typically not working with too many people because it can cause some confusion and trouble for you down the line. Not to say that if you're not happy with your person or if you don't agree with the strategy, don't go and get a second opinion. Just make sure that you're aware of where they're putting in applications and who their actual lenders are. Are they working directly or are they giving your application to someone else to input with a bank, right? You always want to make sure you're working with licensed people and knowledgeable people. So again, from my experience, I've seen it so many times. People are not working with the right people. They get into trouble and then they come to me, and at some point, I have limited things that I can help them with because some of the bridges have already been burnt with other lenders or other people. So, if you want to give yourself the best hand into home ownership for Q1, start early, right? You don't have to wait till March. If you want to buy a home in March or April, don't wait till like March to do this. You can start to start to put in your pre-approval or at least talking to people about what's required. How much do I need down? Can I qualify for this without, can you do a quick application, run some numbers for me very quickly without putting in a full application? Those little things can help you save a lot of time and money and headache down the line.
Perfect. So where can people reach you?
So best way to reach me is by giving me a call or a text message or WhatsApp. My phone number is 416-399-1993. People can also add me on Instagram, which is Mortgage Money, as well as they could reach me through my brokerage, which is North Power Mortgages Inc., northpowermortgages.ca.
Perfect.
Yeah.
And so, for all of you watching, I hope you found the show helpful and informative. And thank you again for spending your dinner hour with us. We totally, totally appreciate it. For those of you who don't know me, my name is Jacqueline Watson. I'm really sorry about the little sparkly things that I have going on. My name is Jacqueline Watson. I'm a realtor with Sutton Group Tower, and I would say if you're thinking about buying, you have questions, I mean, figure out if you can buy or you need to plan for a purchase. Either way, I will say it's not a good time for everyone, but it is a good time for some of you, people that qualify. It's not a good time for everyone to buy. Like there are people that tell me, "Hey, I have a rental and I'm only paying 800, good luck, a month." And then I say to them, well, if you were renting a one bedroom for 800, are you taking the rest, which is the 1600 that you're saving in a bank account for a down payment? And I can guarantee you, you're not doing that because if you're renting for $1,000 or 1,500 and you haven't saved the rest of it that you would need for a mortgage or for to rent a different unit if yours goes up for sale and the owner wants to live in it, then you have a bigger problem, right? So
Yeah.
I'm seeing a lot of people who are calling me on a daily basis saying, "Hey, do you have any rentals? Um, I only have so much." And I'm like, "Yeah, I really can't help you for that much, right? Because it's not possible. Like it's not my rental, but there are no rentals that are cheap these days. And at some point, you're going to end up paying the bigger amount, and you have to live somewhere.
Yeah.
So all I would say to you is, you know, there are deals to be had. I mean, the prices are depending on where you're looking and what you want to look for. There are there are deals to be had, and before you jump in with 2 feet without knowing, like just kind of ask a few questions, figure out if this is the right market for you. Um, and next week, right at the announcement,
Next week. Yeah.
I I
Yeah.
definitely need your help. As you know, I don't put my listings on my social
Yeah.
because social is to be
Yeah.
social. Um, so you won't see the listings there, but I do have a condo that's coming up, great area, Danforth Village. So if you're interested, and it's really a really nice condo. So hopefully you'll keep an eye open if you're interested in a condo and get an opportunity to work with me.
Yeah,
So
absolutely. Yeah.
yeah, perfect. So thank you so much again for your time, Annie, and thank you everyone else um, for watching with us. And until next time, we'll see you soon.
Thank you.
Bye.
Take care.